Good day, ladies and gentlemen. Today's lesson is on candlesticks. So we'll be looking at what candlesticks look like and how we use them in our trading. Right, so this is what a candlestick looks like, right? We have our real body right there, the square right here, that's our real body. We have our top shadow and our bottom shadow. Now it's very important for you to know the difference between your body and your shadows when trading in the markets. All right, in lessons that are coming, lessons that are more advanced, where we'll be looking at the price charts, you will begin to know what is the significance of the real bodies and what is the significance of the shadows. A bullish candlestick represents market prices that are moving higher, market prices that are moving up, right? So in this case, we have your bullish candlestick. We have the open, the close, the high, and the low, right? So the low is the lowest point that the market traded to with this particular candlestick. The high is the highest point that the market traded to, and we have our opening price, which is where the candlestick began, and we have our closing price, right? Our closing price is always on top of the opening price when looking at bullish candlesticks. Let's look at a representation of that. We can see right here that we have a candlestick that has appeared. We have the opening price there and the closing price there. We have the low and the high. The next candlestick will open here, right? It opens there and it closes on top. The next candlestick would open there, price would maybe trade lower, and this is the lowest point that it traded to. It trades higher, that's the highest point that it traded to, and it closes there. So every candle that appears next will appear from there. So the closing price and the next candle begins there, and market trades higher and higher in that manner. So these are how our bullish candlesticks will stack up next to one another, representing a market that is bullish or a market that is trading higher and higher. This is what a bearish candlestick looks like, and it represents market prices that are moving down or moving lower. We have our open, our close, our high, and our low. So we did say that our high is the highest point that the market traded to, our low is the lowest point that the market traded to. We have our opening price right there, and notice that in the case of a bearish candlestick, we have our close below our opening price. We see that a candlestick forms like that. There's the opening and there's the closing right there. The next candlestick will open there and it will close at the bottom. And that is how the candlesticks that follow, if they are bearish, that is how they'll be moving. Opening there, closing there, opening there, closing there, right? Opening there and closing there. And this shows you a market that is moving lower, or a bearish market. We have reached the end of our lesson. We hope that this was another insightful one, and until we talk again next time, Forex OGs signing out.